Well, those stats don't worry Art Hogan. He's bullish on the economy and the stock market, and he's calling for the S&P to end the year at 2050. He's chief market strategist with Wunderlich Securities. So, Art, you know, this month of May, as Dominic was just talking about, there was a different story if you were talking about the S&P 500, a different story for the bond market, and a different story for the economy. How do things look for the rest of the year? Make your case.
Well, Susie, I think that's a very good point, and we have gone through a confusing time. But as we look ahead, I think one of the things that we can count on is the second quarter is going to be much more robust in terms of GDP growth rates than the first quarter was. And by much more robust, if we settle in where we are now, GDP in the first quarter is going to look like something like -1%. We expect that to increase to plus 3.5% to 4%. So think about that. That's 450 or 500 basis points in adjustment to the economy. I think that's going to percolate into both equity markets and probably start cooling off the bond market a little bit. So I think that's a big driver. And the things we're looking at in the economy that have been increasing steadily, like sales of homes, like industrial production, capacity utilization, like car sales, all point to a stronger economy in the 3 quarters ahead of us versus the 1 quarter behind us.
What's going on with bonds, Art, and where do you expect yields to end the year?
I think the bond market is reflecting something that's much more technical than it is fundamental. I just think there's a supply and demand imbalance. I don't think we're issuing as many quality bonds. The government certainly isn't issuing as much. I think there's pensions rotating, into bonds and out of stocks after massive gains last year. And I certainly think there's a short squeeze in a very crowded short trade. So I'm not as concerned about that. I expect the yield on the 10-year to be closer to 3 and change than to 2.5 or less than 2.5, where we've been spending some time for the last couple of weeks. So I think that as we normalize in the economy, I think bonds will probably normalize at rates that are above 3 and closer to 3.5 by year end versus where we stand now at 2.5.
Art, you've given us 8 stocks. That's a lot. 8 stocks that you're recommending to your clients. 4 of them are in the energy area, oil and gas production companies, and the other 4 are in regional banks. A lot of them are not household names. Just tell us, what is the theme here? Why do you like them generally?
Sure thing. So in general, on the 4 regional banks, the simple one-liner here is that in all the regional banks we look at, and we look at hundreds of them across the country, one thing that's consistent, we're seeing loan growth. That's very important. It's new to the cycle, and it's higher than the average. And we're seeing stable net interest margins. And that just basically means these guys are making money, and there's demand for their products. It won't take much of an uptick in interest rates to see the net interest margins expand. There's a lot of M&A activity going on. There's a lot of solid balance sheets. I think regional banks are a great play. The 4 that we gave you are some of our favorites. On the E&P side, I think there's an energy revolution going on. There's no secret to that. It's been in all the papers, and there's some great shale plays across the country. We picked 4 E&P companies that are our favorites there. And the things that the 4 companies have in common that we pointed out to you is very similar. They're in the right location, so they're in the right shale plays. They're terrific operators, and all 4 of them are currently trading at a discount to their fast-growing peers, and most of them are growing production at a rate faster than their fast-growing peers. So you're looking at bargains in what we think is going to be the most important sector in 2014 and 15.
Art, I want to mention the names of those companies that are on your buy list: Center State Bank, Resonant, First Financial, and Hancock Holding. Also in the energy area, you say Gulfport, Resolute Energy, Matador Resources, and good old Bill Barrett, whoever he is, he's going to do just fine. Let's talk a little bit about one area that you do not like, and that is gold. Very quickly, 20 seconds, why?
Yeah, you've seen a collapse in gold, and I think that part of that was a big play and a flight to safety. And this is not a new move. We're from 19 down to 12 and change. I think we're going to see 1,000 before we see 1,300 again. And I think that's the dynamics of that marketplace. I don't think there's that flight to safety in the gold market much longer.
All right, you've given us a lot to think about for the second half of the year. Thanks so much, Art. Art Hogan with
Thank you.
Wunderlich Securities. Have a great weekend.